Welcome everyone. Today I'm going to take some time to improve your understanding about accounting. Children, we all live in a business world. I think no argument on that statement. In simple words, we can't think about our lives without businesses. I think what you ate in the morning, what you wear, what you use, actually, even the social media nowadays, everything is business. So we can think about only one thing without business, that is breathing. We can't think about any other thing without business. So you agree with my idea. So we all live in a business world. So in this business world, children, you can see different types of businesses. Some business are profit oriented, some business are non-profit, some business are owned by the government, some are owned by the private sector like sole traders, partnerships and companies. Some are small, some are large, some are medium. Whatever the business they have, whatever the purpose. So at the end of the period, they have to check whether they have achieved their target. So they need the support from the information. They need to know whether they have achieved their profit or non-profit target. So accounting will fulfill that requirement. So basically, accounting is a subject which tries to provide information, financial information mainly, to stakeholders. To stakeholders. Stakeholders are the people who have interest, who have willingness to know about the business, like owners, managers, employees, government, even the community of the public. So basically, accounting will try to provide information to the stakeholders to take correct decisions. So accounting, therefore, accounting can be called as the language of business. So basically, to communicate, we use English now. In the same manner, to talk about the business, you should have what accounting. So accounting is basically the language of business. So today I will improve your knowledge about what happens in accounting, the main three theories in accounting. Children, in accounting, as you know, we try to provide information to the stakeholders. So I think what you uh, heard so far can be seen in this slide. So basically, accounting is trying to provide information to whom? Stakeholders. Why? To take correct decisions. So in accounting, there are main three theories. So business entity concept, accounting equation, double M system. These are like three pillars of the accounting. So if accounting is like a pot on earth, three stone, three bricks are like entity concept, accounting equation, double M system. So double M system is introduced by Luca Paciyoli. So to respect that person, we consider Luca Paciyoli as the father of accounting. So now I'll tell you what really happens in accounting. As I told you earlier, we are trying to provide information. So basically, information means final accounts of financial statements. So we prepare income statement to identify profit, statement of financial position to identify the financial position of the company or business, then statement of changes in equity in a company to see the changes of the share capital and reserves. In addition, we can prepare even a cash flow statement. So basically, those are financial statements. Then to prepare these financial statements, we have to understand what's going in the business. That's basically what they receive and what they give. What they receive and what they give, transactions. So exchanging resources between the business and outside parties. So when in accounting, we have to basically in financial accounting, we have to convert these transactions to the financial statements based on four steps. It's like the garment factory production step, production process. So in garment factory, we try to convert raw material, raw clothes to the finished goods. So then they use cutting, sewing, ironing, packing. In the same manner, we categorize accounting process to four steps. First step is, children, uh, keeping a written evidence about the transaction. So we don't trust verbal evidence. So we trust only bills or written evidence in account. So basically, in account, we are trying to keep written evidence about every transaction. If it is a cash receipt, receipt. If it is a payment voucher. If it is a credit transaction, invoice. In addition, debit, credit notes. In addition, petty cash vouchers, general vouchers. Those are written evidences about the transaction. In addition, by keeping only bills, you can't evaluate a business. But say, if you take, let me take one small example. Say business A is having 100 bills, business B is having 200 bills. You can't tell business B is better by looking at the number of bills, you can't evaluate the business. Sometimes the amounts might be different, of large amounts sometimes. So basically, the final amount of the bills, business document or source documents, we have recorded in a first row original place. Those are prime entry books. So mainly in our syllabuses, in Cambridge, Edexcel, and other syllabuses, we in a ordinary level, we understand about 7 prime entry books. 2 prime entry books under cash transaction, cash book, petty cash book, and 5 prime entry books under credit transaction. Those are purchase journal, sales journal, purchase return, sales return, and the general or the journal. So then, can you remember the Luca Paciyoli, the father of account? He introduced double entry system. According to double entry system, children, every transaction has 2 impacts on the business, and we record those 2 impacts in 2 accounts. Then there should be a place to gather these accounts. That is called ledger. So basically, ledger is the pool of accounts. In future, you will learn when the business become very large, they keep sub ledgers. Then to represent sub ledgers, we keep control accounts in the general or main ledger. At last, in the accounting process, we check our accuracy based on the trial balance. Based on the correct trial balance, we prepare final statement. And to understand, if we can't tell trial balance, the trial balance difference we transfer to a temporary account. We will learn about that in my future videos. That is suspense. What is that? Suspense account. So in future, I will explain about suspense and the correction of errors. Anyway, so this is called scope of account. So everything or the area of accounting. So account inputs, process output. Then you should understand the foundation for this account scope of accounting. The foundation for this scope or the area of the accounting is uh, 3 theories mainly: business entity concept, accounting equation, doubling system. So I'll tell you business entity concept first. When you prepare accounts in any business, you should assume the business as a separate person from its owner or owners. Basically, you think from the business point of view. Think from which side? Business side. So basically, business entity concept, accounting entity concept, or briefly, entity concept means thinking about any business matter from its side, from business side. So when you prepare final accounts in sole trader business, you think from the sole trader business point of view. In a partnership, not from the partner's point of view, from the partnership point of view. In a company, not from the shareholders point of view, from the company point of view. At last, in a society, from society's point of, from the club's point of view, not from the members' point of view. Even in the government business, from the government point of, not from the government point of view, from the business point of view. That is, I think, clear. So business centric concept means basically business point of view. Then when you think from business side, you can see a lot of resources. On the other hand, you can see 2 supplied parties. Main supplied party, the owner or owners, and in addition outside parties. So we can show a relationship between the resources and supplied party. What is that? Accounting equation. So accounting equation is the mathematical relationship between business resources, assets, supplied party, owner's portion, capital or equity, outside party's portion, liability. So basically, first accounting equation is children, assets equal capital plus liabilities. What is that? Assets equal capital plus liability. So if you want to find the capital, capital equal assets minus liability. You want to find the liability, liability equal assets minus. You going to find liability, assets minus capital. So I think that is clear. Then I'll later I will take a separate video to explain accounting equation. Now I'll give a brief idea about the double system. I will keep this presentation link on the comment section. You can download the presentation and listen to this video. If you have doubts, you can put on the comments. At last, I will tell few words about double system. As I told you, this system is introduced by the Luca Paciyoli in 1494, about 526 years ago. So 7 years ago. So anyway, under this system, Luca Paciyoli, the father of accounting, emphasized every transaction has 2 or dual impact or double impacts on the business, and we should record those 2 impacts in 2 places. One impact on the left side. Left side means debit. The other impact on the right hand side, that is credit. So basically, accounting a double end system is telling about the 2 impacts, debit credit entries. Then to to decide whether the entry is on debit or credit, we can create double end system. So this presentation is covering making or building double end system. So what I have done is I have converted the accounting equation to double end system. So what I did was profit. You know, if you think about sole trader, if you think about partnership, if you think about company, the main purpose is profit. Profit equal income minus expense. So then if there's a profit, there's a profit that should be given to whom, children? The owner, capital. So capital plus profit. Profit equal income minus expense. Then what I did was expenses, negative thing, part I transferred to the other side. Then I got another step of accounting equation after the adjustment of the profit. What is that? Assets plus expenses equal capital plus income plus liability. So basically assets and expense increase we record on the left side or debit side, capital income liabilities on the right side or credit side. So and vice versa. So just refer this table. I'll take one example and in this video, then I will take separate small videos to explain count equation, double end system in future prime entry books and correction of errors, bank rec, control accounts, trial balance, final accounts of different businesses. So if you think about one transaction, just one transaction, owner is giving money, say owner is bringing $5,000 to start the business. Owner say deposited that 5,000 in the business bank account. Anything from the business side, assets increase, bank account debit, assets increase debit, bank account debit, and capital account has to be credited. So that is about what? Initial capital. In addition, when you sell goods on cash, say you are getting a check, assets increase, bank account debit, sales is an income account credit because income increase, credit. So I think it's clear. I tried to explain a few things. I think I tried, you got some idea about, you got a clear idea about the purpose of accounting, business entity concept, accounting, and double system. Thank you everyone. We'll meet from another video in near future.